The meme stock comeback explained. A company that's losing money, barely covered by analysts, suddenly jumps 300% out of nowhere. No earnings beat. No buyout. Just Reddit, memes, and madness. What's going on? Are we in another meme stock boom? Or is this just another trap for beginners? Today, we'll break it all down in plain English. Let's dive in. What actually happened? Let's start with what actually happened, step by step. A few weeks ago, a random Reddit post started gaining traction. It mentioned a stock, let's say, American Eagle, as being undervalued because actress Sydney Sweeney wore their jeans in a campaign. That's it. No official news from the company. No big announcement. Just a celebrity in jeans. Then, someone made a meme. Then 2. Then 20. It went viral. That post spread across Reddit's Wall Street Bets forum, Twitter, and even TikTok. Suddenly, thousands of retail traders started buying the stock, not because of fundamentals, but because it became a meme. The price started moving fast. Within hours, traders on Robinhood and other platforms started piling in, and soon the stock chart looked like a rocket ship. Plus 50%, plus 100%, plus 300%. The psychology behind meme stocks. This isn't just about numbers, it's about psychology. When traders see a stock rising rapidly, they feel FOMO, fear of missing out. Even if the company is losing money, they think, if everyone else is getting rich, maybe I should too. On Reddit and social media, this gets amplified. It becomes an echo chamber. If one meme gets 10,000 upvotes and you see everyone saying buy the dip or to the moon, it's easy to get sucked in. Add in a celebrity like Sydney Sweeney or Elon Musk tweeting something vague, and boom. Everyone believes it's the next GameStop. This is meme culture meets the stock market. And that's a dangerous combo. How companies react, or don't. Some companies jump on the moment. They see their stock go up, and they raise money by issuing new shares, called stock dilution. That means they sell more shares into the market, which often causes the price to fall later. For example, Opendoor, a real estate tech company, used their meme moment to raise over $100 million. Smart? Maybe. But also risky for late buyers. Other companies? They stay silent. They know this hype is temporary and don't want to get caught promoting a pump and dump. A pump and dump is when hype artificially inflates a stock price, and insiders sell at the top, leaving retail investors holding the bag. Different views, retail versus institutions. Retail investors, the everyday folks, often join for quick gains. It's emotional. It's thrilling. It's like gambling, but with charts. Meanwhile, institutional investors, hedge funds, asset managers, usually stay far away from these trades. They know how fast they can turn ugly. Why? Because meme stocks are volatile. That means the price can jump 30% one hour and drop 40% the next. There's almost no logic behind the movement, just momentum and emotion. Some retail investors make money, but most don't. Especially those who buy late. The big questions, who wins and who loses. So, who actually profits from this? Early buyers sometimes win. People who bought in before the hype might triple their money in hours. But here's the catch, once the hype fades, the stock usually crashes. It returns to reality. And those who bought in late, often beginners, end up losing 50%, 70%, even 90%. Why? Because the company didn't change. It didn't suddenly become more profitable. It just got caught in a meme cycle. A week later, it's forgotten. And the losses? Very real. Takeaways for beginners. If you're new to investing, here's what you need to know. 1. Don't trade hype. Just because something's going viral doesn't mean it's a good investment. 2. Study fundamentals. Look at revenue, debt, and real news, not memes. 3. Manage risk. Don't invest money you can't afford to lose. 4. Watch for signs of collapse. If something feels too good to be true, it probably is. Education beats speculation. Every time. Have you seen any meme stocks lately? Have you ever joined one, maybe made money, maybe lost some? Let us know in the comments. And if you want more honest, hype-free market breakdowns. Subscribe now. We've got your back. Subscribe for weekly market deep dives. Join our Discord for daily finance tips. My name is Felix. Thanks for watching. See you next time.